Some of the most valuable companies in the world are $2 trillion, $3 trillion market caps, and that's pretty rare air for any company, and there's only a handful of those. So saying all that, it reminded me that BlackRock just announced recently they have amassed a mega fund around only secondary transactions. First, they predict that there will be basically $4 trillion in a private equity secondary market in transaction value, not even the market value, the transaction value by 2030, which is a doubling of where it is right now. Let that sink in for a second. They're talking about $4 trillion in private equity secondary market transactions by 2030, which doubles what it is right now. So have we crossed a threshold where private markets are going to rely on secondary markets, secondary transactions for liquidity because these companies have now surpassed anything that the public market is going to have appetite for? Surpassed thresholds that any private company could do any kind of meaningful merger or acquisition of OpenAI. And it's not just OpenAI. I mean, SpaceX has probably crossed this threshold. Anthropic is probably about to cross that threshold. So here we are. What I talked about a couple of weeks ago in that episode is bearing itself out or showing itself to be true, at least in recent news, where even the Wall Street Journal is saying, how do these companies go public? And if they can't go public, where does that liquidity come from?